Hey guys, what's going on? I'm Alex.
And May.
Marco here.
Hey, so apparently since the last week, now is the apocalypse, or we call it the bank apocalypse, because apparently two banks that starts with an S decide to go under.
Three, actually.
Three,
Three.
yeah. So basically, it's in my lifetime was unheard of. But you always think of these banks as just indestructible, you know, the institutions that you could pull money out of on infinite.
Yeah.
This time it just really shows how fragile the whole system is. So, Marco, would you like to start, or May? What exactly happened, and if I'm a customer, what should I do?
Yeah. So from my understanding, all these banks with the name start with S have problems. It started with Silvergate. We talked about it last week, and this week all of a sudden, Silicon Valley Bank, which is the 16th largest bank in America, it's failing. And the reason of this failing is because banks usually, what happened is like they take customer deposit and then they loan out part of that money. But except for this case, Silicon Valley Bank also invested in U.S. Treasury bond, which is being looked at as the safest investment ever.
Yeah.
However, for the last kind of 1 year, when the Federal Reserve is aggressively increasing rates, these bonds actually decrease in value.
Wow.
While usually, if you don't actually sell out these bonds right away, maybe the value will increase again, right? Like after 3 years when the rate actually stable down. However, what happened was in the last 1 year or half a year, the withdrawal it's increasing. So bank is running out of liquidity. They couldn't sustain these kind of withdrawal. So all of a sudden, Silicon Valley Bank needs to start selling their bonds to get cash, and they're taking a massive loss with these bonds. And all of a sudden, the bank needs to start going out to raise money. And when they do that, they have to do roadshow. And people started to notice that this bank has problem. And all of a sudden, in March 9th, there is like a massive withdrawal. So something because of the scare, something like 4 point something billion was withdrawn within 1 day. So all of a sudden, March 10th, the bank has to cease operation. No money can be withdrawn, and everybody started to panic. And that panic actually spread all over the banking system. And also the Signature Bank now is also ceased operation because of a very similar situation. Well, the good news is that Federal Reserve actually stepped in, and the government actually stepped in and started to guarantee withdrawal. However, these banks are going to fail if you're an investor or if you hold one of their debt or their bonds, that is all gone.
Wow.
Yeah, it's pretty crazy. It's a crazy, crazy story.
So an analogy is almost like me, Alex. You give me money.
Yeah.
You go, hey, Alex, can you hold some money for me? I go, sure. And I took that money and I go and invest in the stock market. The stock market's down, which is fine. I just kind of wait it out.
Yeah.
But then what happens, you come up and go, hey, Alex, I got to buy a car and I got to feed the kids and stuff. Can you kind of have some of my money back?
Yeah.
And I'm like, crap, and then I would then exit some of my positions to give it to you. But then I need to raise more money. So I asked, do a roadshow, and then everybody saw, hey, why is Alex doing a roadshow?
Yeah.
Next thing you know, everybody's like, hey, Alex, I got to feed my kids too. And then, and then I just disappeared in Mexico, right?
Yeah, disappeared. Yeah, that's a good analogy. Yeah. May, what do you think? You think this is going to be contagious?
Of course, it's going to be contagious in so many ways. But before I go there, I just want to give you a good big compliment on having a very precise, consolidated, understandable 4 minutes summary of what when shit hits the fan. And
Thank you.
so yeah, that's very interesting. I just jumped from Clubhouse to here, and we have the similar conversation. And it's just like, this is crazy because, Fed and government, they have two different roles, right? Government is looking after people, and Fed is looking after money. So Fed purpose, they don't give a damn about who's going to live or die. They just give a damn about how much money supply is enough or not enough, and what they're going to do. So they can play with only a few things: interest rates and money printing. They can do only two things, pretty much. That's Fed's job. And government is like looking after people, but the thing is, humans and money are very closely connected. And but when you see this action, Fed look like, holy moly, if the money collapse, then everything collapses, and everything's like what we've done for like the past god knows how many years, like 50, 60 years, I don't remember. Anyway, for that long, it's gonna, if the world get into the Great Depression, everybody's screwed. America, non-America, everybody's screwed.
And I think the interesting question here is, should the Federal Reserve keep increasing rate because the banks are failing? They can obviously manage these sort of aggressive rate increase because they are holding a lot of like U.S. Treasury bonds, but at the same time, like, inflation is still very high. So what should you do if you are like Chairman Powell, right?
Chairman Powell. So Jay Powell, what? So this is what the market's betting on, because everything is turning into turmoil, and Fed can't raise interest rate like this anymore. So they bet that interest rate will go down, and you see the assets price going up. You start to see green. Bitcoin went green. Everything's green. Like, holy,
I know. Bitcoin just keep going up since these banks are failing.
So you start to see a decoupling from the financial products and real sector more and more. When you see the COVID time, you see how much stock price went up when people are dying, and
it's terrible.
It's terrible, bad joke, cruel. But you see that you start to see decoupling every time that financial aid's coming through. It doesn't go to the real sector; it goes to the financial sector. But if financial sector falls, everybody will die.
Suffer. Exactly. It's not fair.
I mean, there's no way you can make a fair sense of it, and you don't have a time machine to go back when the Great Depression time and say, hey, which is when 70 years ago, 80 years ago, like the big Great Depression, and when people have to share meals because one person can't afford to have 3 meals a day, those kind of time. And Fed step in not to have that Great Depression again 30 years ago, right? And so, but when they step in, they interfere a lot. You see civilizations. You see a lot of rich people, and I'm telling all the tycoons, and probably CP included, because there's so much money in the world. So the money goes everywhere, and it goes to rich people like the most. So people benefit from it, but it will create such instability in the society and in the world. So it's a very shitty dilemma. And now people learn that Fed's going to backstop. Hey, if you have put enough pain into the society, Fed will press the stop button. But how much pain we need in order to receive aid? And is that kind of situation makes us weak?
I mean, the Silicon Valley Bank, would they have any consequences? Like in 2008, when all these big funds and these big banks investment banks are failing, and it's too big to fail. The Fed step in, and then the execs are still receiving their fat bonuses, and they're laughing their way to the bank. So,
But what very similar situation is happening in Silicon Valley Bank, because people are now complaining the fact that Silicon Valley Bank actually paid off a bonus before it fell, before they kind of like started the roadshow, before they started to like review all this information. So yeah, you can make an argument that they purposely did it that way, right? So to make sure that they get paid before the bank fail. So yeah, it's a terrible situation, and I think the consequences now is that yeah, the investor of Silicon Valley Bank and all the debt owner or bonds owner of Silicon Valley Bank will get paid for nothing. Like they will get paid back for nothing, like it was all zero out, basically. Yeah, because all the money has to go into the deposit first. Yeah, the deposit people are kind of the priority now for the situation. Yeah. Yeah, it's terrible, and I think the scariest part is that we don't know how deep this problem is. It could be contagious. It could be like more banks have the same problem, and then it's going to be Armageddon. Yeah.
And why not? Why not? You start to press risk by increasing interest rates to the bank, and we don't know each bank how each bank structure.
Yeah.
So
But mate, what would you do if you were Chairman Powell? Are you gonna stop increasing rate because of this is happening, or you're just gonna do it because the inflation is still high and this is your job to stop inflation?
hard question. The thing is, what if it's a job? If you think if I'm not a humanitarian, okay, and this is a job, and so I have to look at my KPI.
Yeah.
So my KPI said that I need to make a good right amount of money, liquidity, and those kind of flow in the world. So that's my KPI, and so I would do I would do similar thing to what he's doing. I mean, based on the KPI that given to me. But if I'm God, then it's going to be another story.
But there is a bigger role that Silicon Valley Bank is playing in the sort of U.S. tech development too, because the Silicon Valley Bank is a startup focused bank. So what happened is that they would start doing these loan or doing these kind of bonds for tech startup, and they have the capability because it's a 40 years bank. And they have always been in Silicon Valley. They have always been tech focused. They're able to underwrite a lot of these risks. So they were able to help startup to kind of breach through these hard times. So these startup company can become a successful tech company. In a lot of cases, in Asia or in the case of like Southeast Asia or Hong Kong, a lot of these tech startup will fail in between their infant stage to their IPO stage because nobody will give them any kind of money to finance their operation. So Silicon Valley Bank actually play a very crucial role in the tech industry, and now that it's gone, I think it's going to have an even longer or stronger effect in the U.S. tech development. Yeah. But I think it's interesting. I'm going to switch the topic a little bit. Like, why is Bitcoin keep climbing? I was looking at the price. It dropped. Yeah, it dropped in March 10th, but then now it's climbing back up, and it's even higher than March 10th.
Okay.
Yeah, Mei, what do you think?
Interest rate.
Interest rate.
I mean, Bitcoin is right now is a financial asset. Whether you like it or not, it reacts with the interest rate when people feel like money is gonna get back into the financial world. Bitcoin jumps, and the sensitivity is high.
Yeah.
So
So you think people take the deposit from people who can take the deposit out from Silicon Valley Bank and Signature Bank, they would deposit these money into Bitcoin. Is that why?
no. I think it's different. I think people from smaller banks will put money in bigger banks, Citibanks, JP Morgan. So you're gonna see these things, but but Bitcoin, there are lots of money sitting aside.
Mm.
No, I mean, I know you're well connected to super loaded people, so so you know that there are lots of money sitting aside,
Yeah.
and these people waiting, and just last Clubhouse talk, I said it's like a spring. You keep pressing and pressing and pressing. Said no, you have your cash. Your cash won't make anything. Your cash won't make anything. You kept saying, you kept telling them this for like one whole year, and then they start to hear a little bit of good news, and the spring got released, and I said, hey, I have cash, and my cash sitting there doing nothing. And for rich people, cash sitting there doing nothing. You can ask Alex. It's painful, right? It's excruciating seeing your cash sitting there doing nothing.
Yeah.
And
Yeah,
then
yeah,
being
yeah.
doing
The
that for
famous
one
line
whole year.
from the famous line from Ray DeLeo is like cash is trash, because his theory is that the cash will like decrease in value, especially when the interest rate is high. So if you just have a pile of cash sitting there. I was listening to the podcast the other day. It's interesting you bring this up. So some guy was like, "Hey, I'm a university student, a professor, and I would talk to my student about crypto, and they invest a lot of like into cryptos, and they would talk about, the student would say, "Hey, I actually like super diversified because I will be investing in like very many different cryptos." Right, but no real asset. No. I shouldn't say no real, but no like traditional assets. Mm-hmm. And then like the professor said, and then on the other hand, my parents will pay off the house, and they think they're safe, and they just keep collecting cash and put it in a bank, and they think they're like doing the smart thing. So people have different kind of like mentality or ideas on what is safe and what is not safe, right? But this story is it's super crazy because we think bank is the safest.
Yeah.
It can't fail, right? If you put your money into a 40 years old bank and it's like one of the biggest banks in America. But no, that's not the case. And it's not like people investing in like subprime loan or anything, right? It's just like putting money there.
Yeah.
It's crazy. It's crazy. Alex, what do you think? What do you think we go from here? What are you most scared about, or what do you think it's most likely going to happen?
Yeah, it's a bit of a shake, and as you guys said, it's really it's really hope it doesn't spark a panic across the world. I think everybody stay put. I know that people are panicked and stuff, but the panic also causes these banks to fail, and when it doesn't have to. And I think I would hate to say this, trust the system, but at this point, I don't think you're helping much by just withdrawing all your money and then put it underneath your floorboards, So
totally.
Yeah.
This
100%.
But do you trust the system?
I'm starting to not trust it so much, but I'm still trying to find any alternative places I could put my money. Because I can't imagine. I mean, I think it's the right thing to do for the Fed to step in to guarantee and safeguard the people.
Yeah.
But in the end, like it's somebody has to answer to this.
Yeah.
A lot of times the people have to pay for the mistakes of some of the elite few who hardly get a slap on the wrist.
Yeah.
So
just slap on the wrist, and then people have to pay, right?
Yeah.
But here's, that's why it's a trap. But and I think I want to put this remark because I don't know our audiences very well, but for rich people, money's trash, cash is trash. but for people who still earning and still building their savings, cash is king. You need cash regardless. You need cash. You need to have enough cash to sustain.
Yeah.
Then when you have enough cash, the excess cash that you have is kind of trash, but not now. But not when you're building up. Yeah. So Alex can say that. I mean, for sure.
Yeah.
But
But at the meantime, I guess everybody stay away from banks with name start with S. I don't know, but anyways.
we have one S in Thailand, and we're not touching that.
Oh yeah, that's right. Oh, that's.
Hmm.
I think that's safe. That bank is
That's
safe.
safe. S stands for safe in Thailand. Yeah.
All right.
All right.
Okay. Well, I think we're running a bit late over here, but again, I think this is a very fruitful conversation. Hopefully, any of the people out there listening to us, you're not too badly affected by this. And I hope next week when we'll come back with some lighter news, as opposed to now. And so I'm going to sign off now. I'm Alex.
And May.
Marco.
Okay.
See you next week.
See you.
Bye bye.
Bye bye.